What I love about real estate investments, that those are tangible, physical assets that are closely interconnected with societal trends and economic trends. As an investor, you can consider a range of different strategies within real estate. It can be a sector-focused strategy by investing in office, retail, industrial, logistics, student housing, social housing, and many other sectors. Each sector has its own unique investment characteristics and challenges. For example, retail sector has been facing very unique challenges over the last few years. This sector is going through major structural shift, where the demand from consumers is focusing more on online retail, and as a result, this affects market fundamentals in bricks and mortar retail sector. The sectors are also very interconnected. Continuing with an example on the retail sector, we can see that this trend and this shift led us to focus more on industrial logistics assets, because those are the assets that are underpinned by the strong demand in online retail. There are many factors to consider when investing in real estate. At the macro level, we look at GDP growth, unemployment rate, population growth, and other factors such as infrastructure. By taking those factors into account, we can actually forecast what are the future rents, what are the future vacancy rates and occupancy rates on the assets where we invest. At the market fundamental level, we would look at factors such as current level of rents, vacancy of the building, occupancy rate, cap rates, and other measures that we need to take into account as real estate investors. Real estate as an asset class has attractive investment characteristics. First, diversification benefits due to low correlation to more traditional asset classes. Second is inflation hedge, in particular for strategies that are more core and focus on income return rather than capital appreciation. Finally, we can find exciting opportunities by investing in more opportunistic strategies that are driven by development projects, and those strategies bring strong capital appreciation. The opportunity set within real estate as an asset class is very diverse and deep, not only across sectors but also across geographies. An investor can consider a variety of strategies when investing in real estate. A strategy can be sector-focused, can be diversified across sectors, it can be a country-specific strategy or a global or regional real estate strategy. There are also different implementation routes available to investors. Investing in pooled funds, making co-investments, setting up a separate mandate with an investment partner, or buying secondaries. As an investor, you may also want to consider various strategies across risk-return spectrum. By building a portfolio of mature, established assets, you're considering investing in more core strategies with lower risk and lower return. By taking on more development risk, you are potentially enhancing your capital appreciation, but at the same time moving up the risk curve. Real estate market is constantly going through changes, and we see this changing dynamic being accelerated by COVID-19 last year. I wanted to bring as an example one recent large transaction in office sector in Sydney. Late last year, Dexus sold 50% stake in Grosvenor Place to China Investment Corporation. They sold it for $925 million, approximately 5% discount to book value and 4.9% cap rate. Now, those numbers on their own don't tell us much of a story. When we look at market fundamentals in the office sector in Sydney, we will see the rents are declining, vacancy rates are increasing, and cap rates are expanding. Now, the office sector on its own is also going through structural, gradual changes due to COVID-19. This is when we as investors need to think outside the box. What are other alternative sectors where we can find stronger tailwinds and stronger market fundamentals? Healthcare real estate sector is one of the sectors that appears the most attractive in the current market environment. This sector demonstrates very attractive demand and supply dynamic, with demand increasing due to increasing demand for healthcare services. Supply is being restricted due to the nature of the assets and nature of underlying services. Cap rates still have potential to compress further, with the current level of cap rates at 6 to 6.5, and with the potential to compress to 4.5 and 5%, which means as investors, we potentially can have strong capital appreciation from those assets. This sector has also strong rental growth potential due to the way the leases are structured. Leases are usually triple net leases with fixed annual rents increases or CPI-linked rents increases. When we look at the quality of the tenants for large assets in this sector tend to be key players in healthcare market, such as Ramsay, Healthy, Healthcare, and others. So overall, on the relative basis, this sector has the strongest potential in terms of the risk return to investors compared to more traditional sectors.